As you probably know, I like these Saturday events. We can kind of kick back, markets are closed. We can kind of kick back, focus on what we're going to cover today. So what we're going to talk about here today and dive into is kind of, what I call precision trading using technical indicators, to capture market turning points, breakouts and reversals. So that's where we're going to get started here. One second. And hey there, Kamal, how are you doing? Glad to see you back. Yeah, glad you're here. Excellent. Haven't seen you in a while, but glad to have you back in the room. So, we're going to dive in today on directional trading. So, start out with a little background on myself. I've been actively on my trading journey for, gosh, now over 40 years. I've got to pinch myself when I think about it, but started back in the early 80s, mid 80s, with a company called Coastal Corporation back out in Houston, Texas. And they were a large integrated oil company with refining and facilities, all over the world, and big into trading oil and oil products. So I was able to get my foot in the door, at Coastal, right out of college, and they actually had a training program where they would train you to trade oil and oil products. So I was really fortunate to get into that. Sent me down to one of the refineries down in Corpus, Texas for about 3 months. And it was a great experience there because you kind of learn the foundation of, oil trading, bringing in the crude oil into the refining and put it into distillation towers and processing, fuel oil and gasoline, things like that. So, spent a little time there and then ended up in the tanker chartering department for a few months, learning to schedule crude oil and all the tanker operations, and really good experience there. Just kind of ground yourself as to, how oil works. And finally got on the oil cargo trading desk, and that's where the action all took off and started for me, and ended up going out to Singapore for a couple of years, trading oil products out there and futures and all the different Asian crudes and products and gasoline. So fantastic experience out there. If you ever get a chance, make sure you take off and visit to Singapore. It's a beautiful place. The food is fantastic. I'd like to get back there for some of those Singapore noodles, which are just really, really top notch. So that was a great experience. But then I got my big start back in the mid to late 80s. A company called Transworld Oil hired me for their cargo trading side of things. And at that time, they were the largest oil trading company in the world. It was Transworld, Mark Rich, and Fibro. So we were, really big in all the different markets, energy. Eventually expanded out into all the different futures and foreign exchange. Spent about 17 years at Transworld Oil and headquarters in Bermuda. Spent about 15 years there and ran the international trading desk for about 10 years out of Bermuda. So that's where I really started, trading as far as options, and we were trading pretty much anything and everything to deal with energy. So from the from fuel oil to gasoline to all the different crack spreads and directional crude and cargoes. It was just a really exciting, fun experience. So that was a little background on myself. And so, going back and looking back at that journey, everything was based on directional trading. So that's what we're going to talk about here today. So the following workshop today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. So, when you look at trading, it really is kind of a never-ending journey of learning to expand your trading knowledge and skills. And what I've learned over my 4-decade trading journey is that to become a better, more profitable trader, you really need to be able to read the charts, understand your technicals, and then manage your trading risk. So when you look at it, fundamental analysis is really great and important because it can lead us to some great companies with good potential growth. But when it's all said and done, we're going to really make money on the stock price and not the company itself. So when market uncertainty clouds the fundamentals of a company can quickly become worthless. And that's what we're kind of seeing now. We're going to talk about it. We're kind of in a transitional phase here where we're going into a period, we've been in a kind of a period of seasonal somewhat weakness, and we're potentially going to get into some seasonal strength here in a bit. But there's been a lot of confusion in the market over AI and all the different things as far as various things happening with the AI as far as destruction of various sectors. But that's clouding the market as far as uncertainty. And that's where you really want to start to look at the technicals, when the fundamentals of companies become kind of worthless based on all of the clouds that are hovering over the market of this, various uncertainty, which will always have degrees of uncertainty. But right now it seems like it's starting to heighten a little bit more. So how can we then achieve this trading success? Well, first off, you want to look and define what makes a successful trade, and then go about creating the steps involved, and then having the trading discipline to follow these steps for each and every trade. So if you go back and look at all the trades that you've done and pick out the ones that are, been your winning trades or even your losing trades, and then break those down and look for whatever, you saw in the trade that made it a successful trade, or even, what made it a losing trade. And typically you're going to find certain patterns that are going to be unique in each and every winning or losing trade. And that's what you want to go back and do. And that's basically what I've done. And with that kind of, procedure or step, I've put together a systematical directional trading process that I've been using for quite a few years. So step one is, look to plan your trade. So, you need to have some kind of directional tools and tactics in your trading. And that's kind of a first kind of step to start with. So I've kind of put together an 11-step guide here to kind of, walk you through. So first, we want to identify trade opportunities based on the macro, trend that's currently, in the markets. We want to always be aware of whatever seasonality is in the markets and how that's going to affect the markets, either as far as a kind of a tailwind or, kind of a wind to the back of the market. We want to look at industry specifics to see where the, various sectors, money flow is going into the rotation of the market. And then you want to have a good database of stocks and ETFs that you can scan and do various scans that can identify certain kind of trade setups or patterns that you want to look for to take advantage of. And then 3, you want to check your charts. Now, over the years of trading, I've kind of put together 5 very high winning kind of probability, what I call probability winning chart patterns. And we're kind of go through those today. And so those are key for any kind of trade that I'm looking to take. I kind of identify the pattern. I see this certain pattern, and it tells me kind of what I should be doing next for this particular trade. Now, 4, we want to validate the stock's relative strength, and we can do that a number of different ways, but I like to usually base it based on momentum flows and the relative strength of the market sector that it's in. Now, 5, then we want to evaluate the current market conditions. Now, there's always going to be uncertainty in the market. We want to kind of quantify that as to low, high, or extreme. So we're kind of reaching a kind of more high, level of uncertainty right now. And so when that kind of situation happens, you really want to start controlling your risk even more. So those are things that you want to be aware of at all times. So that's step 5. Now 6, then, establish your profit targets. So for any trade that we're looking to take, we always set our targets as to, where is our profit target? Typically, I'll set 3 target points, to the upside or downside, depending on the trade that we're doing. And then the next thing we want to do is also establish what I call my trigger points for defending the trade, or your stop loss levels, that when certain points in the market are hit, that's going to trigger that you either need to, stop your trade out, or trigger a defense that you maybe want to do as far as maybe adjustments to your trade. So we're typically, most all the trades that we're doing are based on options, some kind of option trade. So it's great because we can then kind of have defense triggers set up where we can then adjust the trade based on the options that we're doing. Now, finally, 9, place the trade, manage the trade, and then monitor that trade to, the close of the trade through expiration or earlier, based on the market conditions and your, exit points based on your trading profit rules and stop loss rules. So these are kind of 11 steps that I like to kind of, go through step by step by step. Now, the next thing is you can't trade blind. So to trade market cycles or swings, you really need trading tools that can identify market cycle turning points. So we're going to be talking about mostly kind of swing trades, which are based on your medium time frame or daily time frame. And these are kind of cycle swings of the market. So when you're trading, markets are never going to go straight up or down. Now, they're typically going to have some kind of cycle where they'll cycle up and down. And what we're trying to do is catch the top of a cycle if we're trying to take profit. We're trying to take the bottom of the cycle to get back in. So we're trying to hit these cycles, either highs or lows, to try to enter and exit the trade. So that's what we're calling these market swings, and that's what you want to try to identify. And to do that, I use certain trading indicators that we'll talk about. So I always recommend then trading with some kind of model or trading system where the trading rules that you're using are based on a repeatable, successful trading process that clearly defines, the trade setup, and so that makes it more easier for you to implement that trade. So you want to kind of trade and take your emotions out of your trades, and by doing this, making it more systematic, we're making it mechanical, and that's going to help to take your kind of emotions out of that trade. Now, a really great trading system is going to be one that you can use and that can be adapted and used across all major asset classes, from a short-term time frame, intermediate to long-term time frame. So, it's going to be a dynamic kind of model that is one that you can use on anything and everything and all the different time frames as well. And so that's what I've put together over the years I've been trading. I've put together kind of a dynamic model that I use that's based off of momentum flows. So, when we trade market cycles, then in any market environment, what I've been using is a design system that's rule-based. And what it does, it kind of highlights the intrinsic rhythm of the market. So this trading system that put together, I call it the Power Cycle Trading System. It's a group of indicators that allows me to anticipate price activity rather than react to it. Now, the system that I put together, rotates and is based off of these 5 winning chart patterns that we're going to go through, using a directional cycle timing model to kind of cycle time the entries and exits based on market cycles. Looks at overbought, oversold conditions, so we can see when markets are getting extremely, oversold, overbought in certain situations where we can take advantage of that. And then looks at price range cycle extension. So a lot of times we're going to get into markets where they can get way overbought, way extended from the kind of the mean of the markets that we're using. So typically I like to look at like a 21 or 20 period moving average, and I use that for kind of my mean reversion. And a lot of times, when you get into super strong markets or weak markets, you're going to see, these areas of extension which get way too extended from this kind of moving average. And at some point, you're going to have that reversion back to that moving average or that mean. Now, the next thing that I really look and focus on is momentum flows. So this is what I use to show me the potential market direction, and it's based on momentum flows across multiple different time frames, or fractal time frame analysis, which we call that. Now, the next thing I always want to be aware of are the moving averages, which I refer to automated trend lines. So this is going to help us to track trend and see when we get a trend break for potential breakdowns in the market. So the moving averages are very important to incorporate and use in your system trading as well. And then last but not least is Fibonacci, which is such an important part of a lot of different trading systems. So I like to look and know at all times where the different Fibonacci support or resistance levels are. And this is going to help us to give us our profit target points and defense target points based on these certain Fibonacci levels that are super important. And so many systems are using, so it's kind of a self-fulfilling that, to know where these points are. Now, by combining all this together, it provides a set of guidelines, which then allows the trades to come to you. So whatever model or system you use, know the trading guidelines that you put in place or the rules, and then stick to them and be disciplined as a trader. So that's a really key thing as a trader, to learn your discipline. Now, the end result of using a trading system is that you're going to make your entry and exit decisions based on the model that you're using and not your emotions of fear or greed. And that's what's going to come in and sabotage your trades. So, when you get in a position where, the market's going against you and you're, fearful about what's happening, you're going to make, a lot of times, bad decisions, or, you might end up, FOMO chasing trades like that. So you want to try to take out your emotions, and the best way to do this is have some kind of systematic process that you can, follow and go with each and every time, step by step by step. So really important to get this rule-based kind of a system approach together and start using it, in your, trading. So step 2, let's take a look at what we're going to do is now go through our directional cycle timing models that I use. And this is a really key and important part of all of my trading. Let's take a look at the timing model. Now, again, like I mentioned earlier, momentum is such a key. So in trading in any kind of market environment, it really comes about to price direction, timing, and then managing your risk. So if you break down your trades, look for those, winning and losing trades, you're going to probably see that, your winning trades, they all have something in common. You either got the price direction right, you got the timing right, and then you manage your risk. So if you get one of these off, though, it can really sabotage your trade. So we want to be, keenly aware of good price direction. Timing your entries and your exits is so critical, and then just, managing your risk on top of that. Now, the best way to do this is with trading tools that can help signal price direction and market timing. And to do this, the best way I've found is to use this, based off momentum flows. So momentum indicators that I use in my system, what they do is they measure price strength or weakness. And when you're using these measurements across multiple different time frames, this really sets up and creates that, kind of a dynamic trend following indicator that you can use. So what it's going to do for you is going to help you to identify new price cycle trends early. You can start seeing the turning points based on momentum earlier. And then this is also going to help you to validate a trend strength or weakness. So when you have multiple different time frames showing good momentum strength, maybe to the upside or downside, this is going to give you, a better confidence of that strength or weakness in a trend that you're looking for. And it's based on, these momentum flows. So by doing that, it's going to then help you to keep in that trend for a longer period of time. And that's going to help you to maximize your profits, by riding the wave or that trend. So, trend strength and the validation of that, we're going to do this through momentum flows, and we're going to talk about that here in a little bit. Now, step 3, and this is such a big part of it as well, is your timing. So this is another really critical, kind of trading edge, and it's timing your entries and your exits. And again, one of the best ways to do this is, again, through momentum flows. All right, so by incorporating then multiple different time frames, not relying on just one time frame, like let's say a daily, what I like to do is break it down from a daily down to 4 hour, usually down to 2 hour, 1 hour, 30 minutes, et cetera, all the way down to 5 minute or 2 minute chart. So that's what we call fractal analysis, kind of breaking it down from the, longer term time frames all the way down. And when you have these aligning together, that gives you a really good, powerful kind of system momentum that you can go with. So if we look at a longer term time frame first, that's going to allow us to see the bigger picture, right? So think about if you're, flying an airplane and you're about 30,000 feet, you're going to see that big picture a lot easier, right? And then when you want to really kind of look down and get more into the details, you're going to lower that altitude, come down lower, and you're going to see more detail. So that's kind of how the time frames are going to work. So what I typically like to do is, start out, typically I'll be using a daily time frame. Let's say we'll use a weekly for kind of a long-term time frame. Okay, so we'll have a weekly kind of long-term, and then I'm going to use my daily for my medium-term time frame, and then intraday below that. So these are the time frames that we can use, and that's going to show us, the bigger picture, and then we can kind of drill down and look for more detail, more, kind of really define where we're trying to make those entry and exit points based on these cycle swings. So the bigger picture first, and then we break it down. We're going to use those shorter time frames. They're going to be then used for helping to plot the actual trade entry into that general trend or that time frame that we're using. So these lower time frames should align with the general trend and what I call the anchor trend, and then we look to get in based on those alignment. So for example here, let's say we're using the daily time frame for a swing trade, kind of cycle trend. And so we've got a trend moving up on the daily swing trade cycle. And then what I like to do is look at the lower time frames, let's say a 4 hour and on down. And now when those start to turn up as well, that's what I call alignment, and that's where you get back into the trade. So let's say, for example, you're coming down on a daily time frame here and you're starting to turn up. So what I like to do is I use my lower time frames, and when they start to turn up in that same direction as the medium-term cycle trend, the daily trend, that's when I will look to enter the trend back to the upside. So if you're just jumping in too early or too late, that's where you're going to get your timing off, and that's where you're going to end up having a lot of different losing trades, because you're in either before the move happens or you're in too late after the move has already happened. So timing is a really key and critical step to get right in your directional trading. Now, step 4 then is looking at the high winning kind of probability trade setups. And these are the chart patterns that I've pretty much defined and identified over the years of trading. So let's go through the various chart patterns, and I'll show you kind of what these look like and what I looked at to kind of capture. Now, there are 5 different basic patterns that I look for. And within these 4 patterns here, there's this one pattern here that I call the volatility squeeze or compression squeeze. So this is a kind of consolidation phase where the market starts kind of churning sideways. And at some point, then it's going to break out of that sideways pattern, either up or to the downside. Now, within these other 4 kind of patterns, what I call a cycle high reversal, we could have this volatility squeeze, and we'll go through these kind of some examples of these here in a minute. Or there might be a cycle low reversal. That's another pattern I'll look for. Or a cycle low retracement reversal, or a cycle high retracement reversal. So these are the kind of the 4 main patterns. And then this is one pattern that can be inside of these other 4. And if I see that pattern, then that's the one I like to really focus on, because it has potential for explosive moves up or down that can be very fast, where you get in and out of a trade pretty quick. And that's going to help to limit your risk, because you're in the trade less period of time. So let's first look at the volatility squeeze breakout pattern and kind of go through what that is. Now, what this compression squeeze pattern is, it is identified as a period of price consolidation again, where your price is coiling in a very tight pattern, and then has an explosive momentum kind of breakout either up or down outside of that consolidation phase. So when you have a security that then has multiple time frames in the squeeze, these breakouts can be even more powerful and greater fall through, kind of like a chain reaction explosion. So they can be very, very fast and kind of like a lightning in a bottle. You'd like to just bottle it up and use it each and every time. So that's kind of one pattern that I really like to look for. And I've got a scanner that is programmed for this volatility squeeze, which really helps to identify it. And we'll look, and then we'll go through a number of different examples here on that here in a few minutes. All right, so first off, that chain reaction then is set off by a lower time frame. So again, it's talking about multiple different time frames. So if you've got, let's say you're working with a daily time frame and it's in a squeeze, and then you look down on the lower time frames, and maybe there's also a volatility squeeze going on, within the 4 hour or the 2 hour, 1 hour below that. So when you have multiple different squeezes, that shows you there's a very, very tight consolidation. And when you have that lower time frame trigger, it's kind of like a tidal wave. It can kind of be a tsunami. It can trigger then the next time frame which triggers the next time frame, and all of a sudden you've got this huge trend, either breaking to the upside or downside, starting from that volatility squeeze pattern from a lower time frame to the higher time frames. So these things can create a lot of momentum up or down, when you're spotting these kind of squeeze patterns. So it's a great, fantastic pattern for swing trades and even day trades. And this is going to give you that big timing edge. And remember, in trading, time equals risk. So, if we can get in and out of a trade fast, we're going to have less risk. And that's going to be a great benefit to, these kind of squeeze patterns when we see them. So here's just kind of an example here. So here you can see this is a kind of tight consolidation phase here. You can see the price actions just going up and down, kind of churning this type pattern. And so you can kind of see the top end of the range and the bottom end of the range. And then at some point, the price is not going to stay there forever. It's going to either break out of that range, either up or to the downside of the range. So the next step is then, okay, how do we then forecast potential direction for that breakout? And so that's where we're going to come in and use momentum, which is going to show us, probable direction based on momentum flows. So this was an example of like an Apple 5-minute chart with the volatility squeeze. So what I like to look for is that pattern, and then the breakout is going to be when you break through that prior the high end of the pattern like that, or the low end. And so with the momentum indicators that you're going to see here in a minute, that'll give us potential direction as to where it's going to break, either up or down based on the momentum flows. And so then you can get set up and ready for the breakout based on the direction the momentum is signaling that breakout to happen. All right, so that's a really big part of the step. So here's a good example of multiple different squeezes on Netflix. So you can see here these dots back here. You see kind of the green and purple dots. Now these are what I've got programmed into my indicators. So when you see these dots pop up, that's showing the rule based on this indicator that the finding for a squeeze is in effect. And so you can see here it's just churning right here, and then you can see the top end of the range, it breaks, and boom, you get a pop to the upside. Now here's your momentum giving you the potential direction. In this situation is to the upside. So this is a histogram, and you can see here this is my lower study 1, which is a really fast momentum measurement, and then 2 is a slower momentum measurement that confirms cycle 1, which is fast. So when cycle 1 goes positive and 2 go positive, that gives me potential direction for this is to an upside breakout. All right, so first off, here's my other indicator that I use. Here is my cycle reversal indicator. So basically what I'm looking for is I see that cycle reversal. That's kind of like step 1. That gives me an alert to the potential change in the cycle that's coming up. So I get ready for it. It's not the signal, it's not the trigger, but it's an alert that there's a potential shift in momentum to the upside in this situation. See the reversals to the upside. I'll go through some charts here in a minute with you. And then the step 2 is that I look for cycle 1 in this situation goes positive. Step 2, and then step 3 is I look for confirmation of that momentum with cycle 2, which is a lower or slower momentum measurement. Okay, so then I have 1, 2, 3 that triggers my momentum, and then when I get the break above those prior highs, that range, that's where you jump into the trade. And so then you can see the move up. And that's where I use Fibonacci then, to help give the areas of profit targets 1, 2, or 3 to the upside that you can trade off of. So here's Netflix, getting triggered to the upside, pulls back down, and you can see these moving averages are also very key. That happens to be a 200-day moving average, that solid blue, and that's the 50 simple. So then you can see Netflix pull back down, and here's another squeeze. See the dots there? So a really tight pattern again. And then we'll see cycle 1, okay, reversal indicator, 2, momentum goes up, 3, cycle 2 confirms, and then a break to the upside. Now the other indicator that I use, you see that orange arrow barely right there? That's a momentum crossover. That's another momentum indicator that I use. So that gives me my other, confirmation for momentum. Break those highs, and boom, really explosive move to the upside. Then you can see momentum again start to fall off. You can see it starts to stall here, pulls back down. Look at price pull back. Price pulls back. That's the 21 exponential moving average. We get another consolidation phase. You can see the price dots right here. So another consolidation phase, another squeeze. And again, same pattern. Cycle one, we get the reversal here, step one. We get momentum positive there. Cycle two, one, momentum fast. So that's step two. Step three here, confirmation. Take the trade. Okay, so that's what I call momentum trigger, and then price triggers when we break a key, either a moving average upside or downside trigger, or it could be a prior highs, things like that. So those are what I call price triggers. So there's a defined steps involved in each of these trades that I take. All right, so that's a look there at the squeeze. Now here a couple more examples. Here was like Marvell, and this is what I'm talking about, lower time frame. So I like to follow, the daily is my swing trade time frame, and then I look to break down. I go to the next time frame down, which I like to look at the 4 hour, and then I'll go down to the 2 hour, 1 hour, 30 minute, that kind of evolution to the downside. So here you see the daily time frame. First off, the 4 hour is going to be faster, right? So we have the cycle reversal here. So step one, we have step two, we have the momentum flip back up on cycle one, cycle two, so confirmation there. And then I have my cycle reversal here on the daily, momentum shifts up. Look at the squeeze there. All right, so perfect. See, here's a 4 hour squeeze aligning with the daily 1 hour. That's a really, really great pattern. So this is very explosive. You can see a very explosive move up. So that's a volatility squeeze, and that's with the multiple time frames for the 4 hour and the daily. Now here's another example. Here was ExxonMobil, and again, very, very consolidated. Price action to sideways right there. You see the dots right here. That's defining the squeeze based on my system, the indicators, the rules that I've got programmed in, and then I've got my momentum shifting up. So cycle one and two, and then the break of the upper end of that channel, that's the price trigger, and you see that really starting to trend to the upside out of that squeeze. Okay, so the indicators, I've got these indicators for Thinkorswim, TradingView, TradeStation, NinjaTrader, and eSignal. Okay, but when I first developed all the indicators, I first developed them on the Thinkorswim platform, but I've got them for multiple other platforms as well. So that's a look there at Exxon. Now, before we get too far down the road here, I'm going to be doing a full in-depth course next Saturday on these technical indicators, all the tools that I have in my toolbox. So I'm going to be doing a master's course, mastering turning points, proven tools and tactics to pinpoint tops and bottoms with precision. So this is going to be next Saturday. And if you'd like to join us, hopefully you will. You can use this promo code, which I'm going to show you here in a second. It'll be DIR15, and you'll get 15% off. You're going to get all my indicators or choice. I've got a couple different packages that you're going to be able to take advantage of here. And let me just go through that real quick, and then we'll continue on. So first off, we're going to have, let me give you the link here. Let me pull that up. 1 second. All right, so use this link here, powercycletrading.com/special. Let me copy and paste it in here for you. So for everybody, you can take advantage of this discount. And this is going to give you all my tools that I have. And these are indicators I started developing back in 2010. I've been using the same indicators ever since. So they're, just click on that, copy or paste, or click on that. That's going to pull up this payment link drop down, which you're going to see here. and then you're going to see all the different various packages. Okay, so let's go through those real quick, and I'll show you basically what you're going to get here. And then, later at the end of the workshop here today, we'll, go through this a little bit more detail. So put that in there, and then put in DIR 15 small cap, DIR 15. This will give you a 15% discount. I've got a couple different options for you here. So put that in. Okay, so click on that link. That's going to pull up the payment order link that you're going to see. Now, I've got two different packages. First off will be package 1 right here, okay, and then package 2. So the difference is package 1 is just going to be the course, the indicators, bonuses, etc. Package 2 will be if you want my alert system, my alert trading alert system added to your course here. So package 1 is the course, and then with this, we'll start next Saturday, the 7th, 11 to 2 p.m. Eastern, or however long it takes, and then we'll finish up on Monday, the 9th, 4 to 5 p.m. Eastern. So I've got this package 1 on course package 1, option 1. You can get everything here today for $167. Okay, so the price will be, the normal price $197, but with the discount code today of that DIR 15, it'll be $167. Now with this package, you're going to get the course next weekend and some of the bonuses and extras that I'll show you here in a minute, and then you're going to get a choice of one of my indicators. Now this is kind of, if you've already got all my indicators already, you'd want to go with this course package 1, option 1. So this will be $167, and this course is going to be based on directional trading using these indicators, all the different tools I use, Fibonacci. We'll go through that in more detail, but this is kind of overview there. Now, if you want course package 1, the course, but with all my indicators, all 8 of my software indicators, course, and all bonuses, this is going to be $397, but today with your discount code of DIR 15, it'll be $337. So with this, you'll get all the indicators, all the bonuses, which I'll show you here in a bit. So you're going to get this, 95% off or 92% off, and there is a 2-pay if you'd like to use that. So that'll be option 2, package 1. Now, if you want this, either option 1 or 2 with my alerts that I send out, I've got 5 different type of alerts that I send out. That's course package 2. And that will be if you want option 1, which is just basically your choice of one indicator and the extras that I'll show you here in a bit, plus the alerts for the next 4 months, and 4 months of my trading club that's going to give you access to that as well. It'll be $507, okay? And there's a 2-pay with that. So just use DIR 1. You'll see these payment links here in a bit. And then if you want package 2, the alerts with all the indicators, all 8 of those and all the bonuses, then it's going to be $677. And there's actually, I've got a 3-pay if you want to do that to make it easy for you to get in. So basically all that is just, $507 plus the extra $170 for all 8 of my indicators, and this is going to give you my scanner as well. So that's kind of the overview there. And then if you pull down, if you click on that Power Cycle Trading / special right here, okay, and then you put in DIR 15 small cap. This is what you're going to find here will pop up. All right, so this is going to pop up here, and you'll come down here and you'll come over. Here's course package 1. It gives you kind of an outline of everything you're going to get. And so this is course package 1, option 1 right here. So this is best if you already have my indicators and bonuses. A lot of you might already have that. So just if you want to take the course, which is going to go through my directional trading model, all the rule setups, how to scan for the trades, and we'll go through more detail on that in a bit. But this will be $167 here today. And with this package, you're going to get a choice of one of my indicators. So you can have a choice, and you can pick it out. You don't have to pick it out today. You can do it, this week, next week, or whatever. You have a choice of either my multi-time frame momentum alert indicator, my volatility scanner, my cycle reversal indicator, my extreme range band, my opening range breakout indicator, my momentum flow trigger indicator. So you have a choice. You can pick one of these, okay? And then with this package for just 167 today, you're also going to get my momentum crossover indicator, which is a fantastic indicator that I use for every trade that I take. And then a 30-day trial membership to my trading club. And then if you decide to stay, it's $97 a month, or we have other price price points for that. Then 3, we'll do a follow-up Q&A. It will be dedicated on Tuesday after the course. And then you're going to get my All About Futures. It's a 31-page futures manual tutorial on futures trading. And then my 67-page tutorial on my trading indicators. So you'll get all that today for $167 if you put that special promo code. All right, so that's course package 1. Option 1 now, if you want all my indicators, which I'll show you those in a bit, you'll go with this option 2. So just come down here, click on buy right there, and that'll pull up this payment drop down and just put in right here. It'll kind of outline everything you're going to get. So it's $197, but if you put DIR15 right here and hit apply, $167 for you today. All right, so that's course package 1, option 1. Now, if you want all my indicator tools, this is a really great, fantastic deal for you. Just come over here and go to option 2. This gives you all my indicators, all the bonuses. So with this, package, you're going to get everything. So just for $337, you're going to get my directional time. This is a 5 study set model. This is my core model here. It has 5 study sets within it. This is my main model that I use for everything. And these are the prices on the website. So you'll get this, plus you're going to get my scanner, my volatility squeeze scanner. This is the price on the website. My multi-time frame squeeze momentum alert indicator. These are all website prices. My signal trigger based on momentum flows, cycle reversal indicator, extreme range band indicator, opening range high-low breakout indicator, and then you're going to get my Fibonacci price target mapping course comes with this package. The moving average cross indicator, you get that, 30-day trial membership, and these other bonuses, the follow-up Q&A, all about futures, and the tutorial there. So that all is inclusive, and you get all that for the price here today of $337. So just basically that $167 right here on course package 1, plus the additional $170 for all those indicators. And you come down here, click on buy now, and again, just put in that DIR15 here, and it'll give you a 2-pay if you'd like that. You can take advantage of that, click apply, and you're good to go there. And then package 2 is that if you want my lead open and close trading alert service added to the indicators in the course that we're going to do next Saturday, here's where you can do that. So this is my kind of a summary of the lead open and close trade alert service. Just a quick overview here. So this gives you access to that for the next 4 months, and you can start and stop when you want. Plus, it's going to give you trading club access to my trading club, which is my trading room and all the other stuff that we'll talk about here in a bit. But this will give you that for 4 months as well. So you get all 5 of my alerts for the next 4 months, and 4 months my trading club, and everything in either course package 1 or 2. And just put in DIR15. So since inception, I started my first alert service back in 2018, and through Friday, we've had running at a 79% win break-even rate over that period of time, which is pretty darn good. 986 trades closed out, 701 winners, 75 break-even, 210 losers. So win break-even rate run at 79%. So these are all unaudited though. So just to point that out, that's for since inception. And then for 2025. We'll run a 79% win rate for the full year, These are unaudited. We'll go back over this a little bit more at the end of the workshop, but that gives you an idea of what you're going to get with the alert service. And then through Friday, for this year so far, we're up right about 80% win break-even rate. We've had 20 trades close out so far for the year, 14 winners, 2 break-even, 4 losers. Okay, so that's kind of what you're looking at there potentially if you do want to add the alert service to this package. So with this, I send out 5 different types of alerts, and so typically 8 to 10 or 12 stocks or ETFs per month. So I send out breakout reversal alerts. These could be breakout debit spreads, credit spreads. They could be counter diagonal trade alerts that I send out, or butterflies, condors, selective earnings trades, and selective what we call pinning trades. So that's what you'll get there. I give you a trading guide for each trade that's sent out, trade setup video that I do at the end of the day. All the trades are listed and archived, and then weekly Q&A, so you'll have that for the next 4 months. You'll have my video newsletter for the next every day after the close for the next 4 months, and then access my virtual trading room during the week, for the next 4 months. And anything on my website, you'll get a discount of 50% off. So a lot of great stuff there, and you can start and stop when you want. So if you do go on vacation, you're not going to be penalized on your time. So that's what you get with my trading club. You'll have access to my virtual trading room during the week, access to my live and recorded Q&As every Tuesday during the week for the next 4 months, and then video newsletter after the close. And so if you do want this, course package 1 is where you get all the alerts, plus option 1, which would give you a choice of 1 indicator and the extra. So just come in here, put in DIR 15, and there's a 2-pay if you'd like that. Click there and you'll get it for $507. Now if you want the alerts and all the indicators, that's going to be course package 2 option 2, and come in here. And then there's a 3-pay if you'd like that, to make it even easier on you if you'd like to take that avenue. So DIR 15 here, small cap, and 1-pay or 2-pay, and then click there, and that's what you get on that. So I just kind of wanted to go through that real quick, and then we'll come back and if there are questions down at the end of the presentation, we'll have more time for that. Yeah, hey there, Casey. So yeah, if you back 2021, this would be similar, but always updated. Yeah, right. Yeah, so that's exactly. So that it's kind of the same basic parameters as that course. Hey there, John. Yeah, well, the best price here, if you want to sign up for the retake here, this is a great deal price there, 167. Plus, if you want, you can if there's one of the indicators that you do not have, then this will give you can add that to your toolbox. Okay, so kind of wanted to put that out there before anybody takes off here, to make sure you have this opportunity. So that's everything there, and we'll go back over this here in a bit, as we get further down the road. Now, sometimes if you have a question, maybe you purchased this in the past, well, just go to your go to your member site area. You'll have a login as a member, or if you for example, if you're been gone for a year or two like Kamal, and you come back and you want to see what you bought in the past, we'll give you access back. We'll give you a password so you can get back in. But if you go back and look at your account and you see a directional swing trading course here, then that shows you at some point in the past you did buy something like this. But when I do these courses, they're all updated. I'll maybe do this once, maybe twice a year. So these courses are always then updated to for new things that I'm looking at to add to the course. So there's always something, new to be added. Okay, so that's kind of where we are there. Now, let's go through the other 4 patterns, and then what we're going to do is we're going to look at kind of what I call a kind of top-down market overview. We're going to look at the markets where I think they're headed to show you some of that, look at seasonality, and then we're going to do some scanning for some trades and look at some more, trading setups here based on these indicators. So first off, here's what I call my cycle high reversal. So this is a chart pattern that I look for, and this is something I'll be looking for on a weekly or which is what I call the long-term time frame, or the daily, which is the medium-term time frame. So this is where you get markets are getting too stressed or extreme. And so these are my extreme range bands. And so this is an indicator that you'll get, with the course package. If you choose this, or this would come as, one of the 8 indicators. So this is based on, average true range here, the 21 exponential. And then when we get to extended from the 21 exponential, which is kind of my mean reversion indicator or moving average that I use, when we get up to this kind of third band here, the second band right up here, that's where it's starting to get too extreme. So you're starting to get stretched. And so at some point, you start getting buying exhaustion. And so you're going to run out of buyers, markets get exhausted, and then what happens, the markets either go sideways, or that's when you start getting these cycle reversals, either, from a cycle high reversal to the downside, or, moving to the upside. So when I see my extreme range band hit like this, and I see the magenta purple arrow here, that's where I'm getting that cycle reversal. That's a really good indication or a signal that there's potential for a change in the cycle. And then you can see sure enough, this thing kind of pulls back. So here's again, and in the course, this is what we'll be going through, how to use these indicators, what they tell you, and then how to use these and set them up for your directional trades. So here you can see a cluster of 3. So this will be pointed out in the course. When we start seeing a cluster, that's a high probability that we're starting to see a cycle change. And then you can see a cycle reversal here, and we did get to pull back, to that mean reversion there. So that's the cycle high reversal, okay, pattern. So that means, the market or price is above all the key moving averages, and it's starting to turn over. See it turn over there. And here's your cycle reversal indicator. Here's one to the upside right here. Here's a cycle reversal to the upside right there. All right, so that's one of the key patterns I look for, and that's an indicator that I use to help kind of navigate that pattern. Now here it is on QQQ on a cycle high reversal on the daily medium-term time frame. So here you can see we had the cycle reversal down here. See that cycle reversal right there, and that's giving you the magenta arrow there. So this is one of the indicators that you'll get. And then we had momentum cycle 1 and 2 go negative, market breakdown. All right, so that's a cycle high reversal pattern. Here's your cycle high retracement. So what this is, your retracement reversal. This is where you're cycling into a moving average, and you're retracing and reversing off that key moving average. So here's a SPY, and this is a cycle high retracement reversal. This is the 200-day moving average. Okay, so you can see it, beautiful trend up. And then what happens? Cycle reversal right here. Here's the indicator right into that moving average. So when you have the 200-day moving average first time up, there's a 99.99% probability that it's not going to get through there the first time. And so then you can see it pulls back. Here's my momentum, cycle 1 go and 2 go negative, and here's that momentum crossover. This is the other indicator that you'll get, and then down she goes. Okay, so that's a cycle high retracement. Now in the course, we're going to be going through all these patterns in much greater detail, but I just kind of wanted to kind of outline everything here for you today to see kind of what we're going to be talking about and covering. Now here's XLK, the technology sector ETF. All right, so here it is. coming up to cycle high retracement off that 200 moving average up here. Here's that cluster. So typically, and we'll go through this in the course, when we have 3 or more, that is a high probability of a turnover. Here's the cycle reversal. We have momentum shift down. Down she goes, hard down. You're not seeing the chart? Is everybody seeing the chart here? If you're not seeing the chart, it's probably on your end. Is everybody seeing the chart or no? Okay. Yeah, if you're not seeing it, Stephen, close out and come back in. Something's going on your side. Okay. So here's a cycle high retracement off that 200. Now here's a cycle low reversal. So here's where we've had a massive crush to the in this situation to the downside. Here's the S&P 500 SPX. So we had the cycle reversal here. See that purple arrow? Right here. Look at that. And then look what happened. That's momentum reversal. You're going to get that with the indicators. Everybody will get that indicator. This is a fantastic indicator here. It's my momentum reversal indicator. And then you can see cycle 1 and 2 go negative, and look at this massive move down. So here, these are extreme range bands, and you can see that you'll get these with the indicator as well. So you can see how it's broken down below these key moving average here. And look at this, look at it trending down. That purple dash is the 8 exponential. So it's just really trending between the extreme range band here, bouncing up to the 8 and just pushing back down. And then at some point in this situation, the market turns, okay? So the first step is cycle 1, we see the reversal. So it's given us a signal, an alert to potential cycle change. Step 2, cycle 1 momentum, my fast momentum indicator goes positive. Cycle step 3, confirmation with momentum. Cycle 2, lower steady 2, which is slower momentum. So now we're starting to see that bottom. And then my confirmation is that orange area, my momentum signal reversal indicator. And then, starts trending back up. So that's kind of a cycle low reversal based on the daily time frame there. That's a pattern that one of my favorites right there. And then here's another example. Here was Tesla, cycle low reversal. You can see how it's hard selling off. And then the same steps. You can see step 1, we get the reversal right here. Step 2, fast momentum goes positive right there. Step 3, confirmation momentum crossover here, up she goes. So these are just kind of, same steps, very disciplined, defined system to use for your directional, directional trading. Okay. So I've been, like I said, I started, developing these back in 2009 and kind of, finished them in 2010, and then, the same basic indicators with a few little extra bells and whistles, but that's pretty much it. There's another, cycle low reversal on IBM. So again, you can see the same exact pattern, same steps over and over. Step 1, cycle reversal here, right there. Step 2, momentum, fast momentum. Step 3, confirmation momentum. And then momentum confirmation here, momentum reversal to the upside, that orange arrow, up she goes. So that's another, example there. And here's a cycle low retracement reversal. This is when it retraces to a moving average and then bounces off of that. So here is TQQ pulling back hard into the 200-week moving average right here. And then you can see this cluster. So this cluster is telling us that there's a potential we're starting to get a bottom, all right? So when I see a cluster of 3, I'll go in more depth in the course why 3, but it's pretty amazing actually. Then we get the step 1, here's weekly. Step 1, cycle reversal here. Step 2, momentum signal, cycle 1, fast momentum. 3 here, confirmation momentum, and then it starts to trend up, and then it gets over here to the to this area here, you know, it comes back down. But that's a retracement reversal off that on a weekly time frame. And then here's, you know, Walmart to show you cycle low retracement on the daily. So a couple of different ones here just to kind of highlight. So here was, you know, Walmart pulling back hard on the daily here. We have the cycle reversal here, step 1, 2, momentum, 3, momentum, momentum reversal, that orange arrow, up she goes. Here's another one right here. Reversal, 1, 2, up she goes. All right. So same steps over and over and over. And here was one just to point out, this was back if you were trading back in the 2008, 2009, this is a monthly, same indicators, but on a monthly, look at that, that was ugly, right? That left some damage. Now here it was on the monthly, came down here, and what do you see? The exact same steps I showed you in the other slides. Here's step 1, cycle reversal right there. Potential alert to momentum bottom shaping up here. Step 2, positive momentum. Step 3, momentum confirmation right there. And then that confirmation there, up she goes. So whatever time frame, whatever, you know, asset class, whatever, you know, same steps over and over and over. Yes, you can do, question, can you use these for futures? Anything you want. We can do futures, whatever. If you want, here's, you know, we're going to go through some, yeah, we'll go through futures. So next thing I want to do is look at seasonality. So this is another thing that you should always be aware of, you know, seasonality, because seasonality is, you know, all the different, you know, times of the year, there's some seasonality to the markets, you know, based on supply demand, situations change, whatever the, you know, whatever you're trading, it could be oil, gold, energy, metals, whatever. But here's currently where we are seasonally, okay? So these are the seasonality continuation charts. And what you're seeing here is the June contract for the S&P futures, okay? So you can see these are seasonal charts going back 5 years, the red, 15 years of black, and the magenta is 28. So you can see currently we're right here. Okay, so we typically will get a pullback at this time frame. You can see right here, we're just kind of churning right here, but there's a potential for a more seasonal move lower until we get into kind of that mid part of March. Now, this is when we start to get potentially a shift seasonally back to the upside. So here you can see this is the 12th of March going back 5 years on the S&P. Look at that. And then here it is on 28 years, you can see. And so then we get another potentially a cycle high right here. That's about April the 2nd. And then you can see there's a potential for even a bigger swing trade move up into June. But those are, you know, seasonal cycles that you can see there. So that's kind of where we are right here. And so I always like to be aware of these seasonal patterns. They can really help you with your trades, you know, to trade with the patterns if you can. And here it is for the NASDAQ 100, pretty close to the same. So we're currently right here. That should be the 27th. So we're currently right there, okay? So here it is, potential for more of a pullback into the next, you know, week and a half. And then you get into a cycle low around mid-March, and you have a potential for a really nice, strong seasonal trend up into early April, but then this can potentially last up into June, especially on the NASDAQ. All right, so this can be a very, very strong trend. So for all the different months, February, you know, when you get into March, April, they can be pretty seasonally strong, you know, a time frame. And then here's crude oil, and this is where we are seasonally on the seasonal chart pattern for crude. Here's the June crude. We're currently right here, okay? So still some, you know, more potential seasonality to the strength to the upside. And then we get a kind of a tendency for a kind of a peak here around early March, pullback, gets kind of choppy there. All right, so just kind of wanted to point out, you know, where we are seasonally, and a very, very important thing to incorporate in your trading there. Now let's take a look at a top-down market review, because we've got, the markets have been kind of what I call, they're in a kind of transition phase. We're in a transitional phase here. We're coming from a, pullback here. Seasonally, we get a little bit of a weaker time frame, but we're going to be transitioning to potentially strong seasonal pattern here coming up. So let's take a look to see where we are. So first, we're going to look at, we're going to do what I call top-down market analysis. And we're going to start off with the S&P 500. So we're going to look at the S&P 500 SPX. We're going to look at the monthly time frame. So this is what I call the macro time frame. All right. So, back when I was running the oil trading group, we didn't have all these chart analysis. We had, different offices around the world, and everybody would talk to each other, telex, whatever. What we usually do is we would have a phone message every day. We would leave, our, market view. At the end of the day, we would call our different offices and leave a message by phone about what we were seeing. Okay. And so we go through kind of this analysis, but now we've got great technicals, indicators, charts. So what I like to do is I start out with the monthly, which I call the macro time frame. So here we are for the S&P 500, okay? And you can see we've been just, momentum has been solid to the upside. Cycle 1, which is, again, fast momentum right here. See the histogram above 0. Now you can see it's starting to pull back though, but 2 is still positive. So we've had this beautiful trend up. You can see it's been right there. Here's your 21 exponential. Look at it tracking that 8 exponential all the way up. Then we had this pullback here. That was that April on the tariffs, when the tariffs first hit. Look at that. And then back up. All right. So now we're just kind of teetering right here, right above that 8 exponential moving average on the monthly. Now, this is what I call top down. Okay. So now we go to the next time frame. That will be the, going down in altitude. We're going to the weekly. Now see what's starting to happen. You can start seeing the momentum is starting to shift, starting to fade. Look at this. Okay. So momentum is starting to turn over, and here's a volatility squeeze. So this is an area right now. The markets are in this consolidation phase. Look at this. See how tight that range is? Look at that. That's been going on since October of last year. Look at that sideways pattern. Now this won't stay there forever, and this is going to then trigger and either break down or break up. Right now, momentum is neutral. Cycle 1 is negative, but 2 is still positive, and it's very close to going negative. That's on the weekly. So we need to be very careful in this market. And there are a lot of things under the surface that's causing the markets to stall out. And everybody pretty much knows it's the AI potential destruction of various sectors, et cetera, software, financials, things like that. That's that uncertainty kind of starting to soak into the market. Investors are getting leery of that. We're starting to see buying stalling out, and that could lead to the rollover in the market. And so then look at here. Here's the daily cycle, and here's your volatility squeeze on the daily. And again, look at that pattern, just tight pattern. We're currently sitting right here. That's the 100-period moving average. All right, we've got cycle 1 positive, but 2's negative. So momentum's neutral, just stuck right in the middle of this pattern. All right, so that's the daily. And then if I want to drill down more, the next time frame I go to is my 4-hour. All right, so that's kind of where we are currently. So the market's kind of this neutral sideways chop. Now, the next thing, let's take a look real quick here at the NDX, which is the NASDAQ, and do the same. And then you can start seeing the the indexes, which ones are the weakest based on momentum. So here's the NDX, NASDAQ 100. Now these are the indicators that you'll get. Okay, so here we are. Cycle 1 and 2 are still positive. We're still hanging right on top of that 8 exponential moving average, and but going nowhere. You can see we're sideways for the 1, 2, 3, 4, 5, the last 5 months. So that's the macro. Look at that beautiful trend up. Look at that. Now let's lower at the altitude. Let's come down here to the weekly long-term time frame. Look at this. This is dangerous. You know, we're in this squeeze. Look at that. Look at that tight pattern sitting right here on that 21 exponential on the weekly. All right, barely just sitting there churning. So we need something to give this market a little bit of momentum, but we're not getting it either up or down right now. And so the next key area will be, you can kind of then, you know, kind of see your price action support here. And then here, this solid green, this is part of the support resistance package. If you do get the core model my dynamic trading model, this is the 50 simple moving average right here. It's color coded, but that'll be the next key moving average. Now look here, momentum's negative, cycle 1 and 2. All right, so what is this telling us is that the potential direction now based on momentum is, if you're looking at a break, the potential break is really looking at for the downside. All right, and then we drop down to the next time frame, the daily, and you can see it's neutral. Right now it's just stuck. We've got cycle 1 had a nice pop up into the 50, but we're negative here. So this thing could start turning, you know, next week potentially. And you know, with the current situation now with the strikes on Iran, we'll probably get some sell-off. But the key next big area of support will be, this is the yellow is the 150 period moving average, and then here's your 200 period moving average right there. So if you want to just kind of relate that to QQQ real quick, we can just kind of put that in, so you can kind of see what is potentially happening here. And so we're going to be looking at probably coming in Monday, probably what I call momentum shorts will probably be starting to happen. All right, what that means is we're going to be breaking some of these key moving averages most likely. And so you can see here, here's my momentum crossover indicator. We're currently hanging right on that 150 period moving average. That's coming in at 603. The next key area of support is right here. That's the 200-day moving average. So that'll be down to 586. So we'll be watching this Monday, and based on what you're seeing here, we'll probably be seeing some downside here. And you can see this prior swing low here. So what I like to do is, what we'll be doing on Monday in the trade room, we'll be looking at, 1 second here. We'll be looking at all the different indexes to see which ones to potentially short. But I like to say, I like to use my 4-hour time frame, you know, with the daily. So you can see we're in a really good 4-hour squeeze here. So that's a look there. And then the other one that's starting to roll over here too is also the Russell 2000. So let's just complete that, and then we'll move on. And you know, if there are any questions, please let me know. So let's take a look at the Russell. So we've covered all the major indexes, and the other thing you want to be watching carefully is the financial sector, because you know, as the financials go, so goes the market, right? So here we are with the small caps, had a really beautiful run up, really still nice solid momentum, cycle 1 and 2 on the monthly. But then let's break it down. Okay, so let's lower it down here. Now look, we're starting to get some reversals here. See the reversals? Cycle 1 is going negative on the weekly. Here would be the kind of mean reversion, 252, that area. But look what's happening here on the daily. Got this sideways tight squeeze here. So look at this, we're sitting right on top of this 50 simple moving average. Cycle 1 and 2 are negative. So this will be a short trade setup. We'll probably be looking at this, and this is what I call a momentum short. If we start breaking this support area, this will be the price trigger. So coming in right about, we've got this low here. We start breaking that 255, we're going to get probably a bigger, you know, move to the downside. So this is something we're going to be watching closely on Monday. So you can see here's the 4-hour, cycle 1 and 2 are negative. All right, so that's a look there. And then finally, let's take one more look here real quick. Let's take a look at the financial sector. And you can see it's starting to kind of deteriorate as well. Here's the weekly, look at this, sitting right there, broken the 50-week simple moving average, sitting right on top here for the swing low, the swing high, sitting right on that 382. This looks like it's about ready to break. Look, cycle 1 and 2 are negative, not looking good. You put all this together, then your potential is for a downside move. Okay. Squeeze dots. Let's see here. I missed. Somebody asked about squeeze dots. So see the dots represent based on my coding when a squeeze starts and when it ends. Okay. I'm just looking at some of the questions here real quick. Yeah, a question, why are the squeeze dots in 2 colors? Okay, this is a good question, and I'll show you here. All right, so see the squeeze dot here where you're seeing magenta? I've got this link to my momentum indicator, cycle 1. So when my momentum is negative, it just paints it, just for visual, it'll paint the dots purple. When it's momentum is cycle 1 is positive, it'll paint the dot green. All right, so just a visual that I use, just kind of, make this where you make quick decisions based off the color codes and all that kind of stuff. All right, so that's a top-down market analysis there. So in summary, things look like things are deteriorating as we speak. Now, step 5 is then scanning process. So it's how do you find the breakout and reversals before they happen, before the herd? So this is the key part of your trades, right? So this is a big part of the alert service is finding the trades to send out, and been maintaining around a 79-80% win break-even rate based on trade selection. So to select the trades that I find, I have 2 different primary scans that I use. One is based on a volatility scan, looking for that squeeze pattern, and the other is based on reversal breakout pattern that I like to use. And so, one thing I'll do is I'll look at sector rotation, just for example. So here is the, last 5 days, you can see the sector, where the money's been flowing into, right? And so again, kind of into utilities, safety play, right? Risk off utilities, you can see communication services, so staples, et cetera. So you can see then year to date where we've been, energy's been the big mover. So within these sectors, then I can drill down, I'll look within these sectors, see where the money's rotating into. Then I can find, the various stocks or whatever in these sectors. I can put them into my scanner and I can look for these different patterns. So this is one thing I do to find the trade. So that's kind of how, I'll go about, putting together a list. Now, here's what I currently have. This is a list of everything that's in a volatility squeeze on a daily time frame. Okay, so I'll show you how this works here. So this is a huge list of everything. See it says squeeze daily, SQD, and you can see it says, like, for example, Lilly. Says Lilly 34. That means it's been in a squeeze for 34 days. So I'll pull that up and I'll show you. So here's a list of things that I'll then flip through to see if they look within the pattern that I like to look for, if it looks like it's maybe going to break out. So I've got things like ABBV, Goldman Sachs, the Russell, the Russell's in a squeeze here on the daily. So a lot of things there. So this is my custom list. We'll go through a few of these here in a minute. And then here I can go into the NASDAQ 100. I can do the same scan. So you can see here on the NASDAQ 100, I just did this scan. And here's a Microchip Technology. It's been a squeeze Momentum's negative, so it's red. It's been a squeeze for 18 days. Marvell's been in a squeeze for 12, okay? Or I can go into the NASDAQ 100 and I can put together, you know, a list here. Here's everything in a squeeze. And so with my scanner, I can go from any time frame. I can go from a 2-minute all the way up to a weekly or monthly. But I'm constantly usually monitoring that daily squeeze here. Now, so this is a, you know, a list that I'll put together, and I'll, you know, look at these every day, typically at the end of the day, to see if I see any new potential trade setups based on a volatility squeeze. And then the other scan that I like to do is these are everything based on a reversal pattern scan that I look for. All right, so you can see a huge amount just popped up here on Friday's close, you know, at Autodesk. These are all reversal indicator potential trade setups based on a reversal, cycle reversals on a daily time frame. All right, so here's where I get my population of a list together, and then I can look at the trades to see if any of these make any sense to you know, for a trade setup based on the chart pattern that I like to look for. So let's flip through a few of these here. So we're going to put this up. I'm going to put this on a daily and a 4-hour time frame. This is kind of the time frame I like to use to monitor, to kind of look for the pattern to see if it's one that I'm interested in. So I'm going to pull this over. This is on the 4-hour. You can see right here, 4-hour. And so now we're going to pull up the list. Yeah, here's the link again. Yeah, hold on, Charlie. Here's the link. You use powercycletrading.com/special. Let me get that link for you. I'll put it back up there. If you don't have it, just click on this and then put in DIR 15. 1 second. Yeah, so let's see if we can get a list of some things that we can look at Monday. So put that in, and then here's your link, then put on DIR 15. And I can do this for upside or downside reversal trades as well. Yeah, so I have the reversal scanner available as well. So that will be in the course. I'll go over with you how to set that up. All right, so let's take a look here at a few things that are in the squeeze and then into the reversal. Let me pull this up. So what I'm gonna show you, here's my scanner. Now this is a, you know, if you want the scanner, this will come with the course package. If you do course package option 2, you'll get everything. You'll get the scanner, you'll get all the indicators. Now, if you do option 1, you can have the scanner as one of your choices. So here's everything in a daily squeeze, Lilly all the way down. All right. You can see everything in a squeeze on a 4-hour. You can see a two-day squeeze. Here's a weekly squeeze. Okay, so let's just flip through a few. All right, so we're going to do this and see what we can highlight if there's anything that pops up. First off is, here's Lilly. See, Lilly is in, this is nice. Wait, let me show you one more tool. This is my multi-time frame. See this down at the bottom. This is another thing that you're going to get if you do all the indicators. This is my multi-time frame alert indicator below, so we can see everything on one chart. All right, so see down here at the bottom. So this down here, this top row shows you everything in a squeeze on every time frame. So you can see a 4-hour squeeze just triggered. That just triggered 4-hour. It's in a daily squeeze, 2-day, 3-day, 4-day. Lilly, massive squeeze, massive. All right. Now the bottom row shows you momentum on cycle 1. So when it's green, it means momentum is positive. So you can see from the 5-minute all the way up to the 2-day, we've got positive momentum. All right, even the daily. See the daily? Okay. So this, I quickly run through everything to see, and I can see where momentum is on one chart. So Lilly, massive squeeze there. Here are a couple others real quick. Here's ABBV. I'm just going to flip through a few of these real quick. ABBV, Goldman Sachs, starting to break down. Russell starting to break down. I'm going to be focusing here on the Russell. This is where you put your watch list together and get ready like a tiger in the weeds, getting ready to pounce. So I'm going to be watching this closely on Monday. The Russell potential short trade setup. Here's MetLife. Look at that breaking down there. Here's XLV. Look at that, starting to break to the upside. Put that down from, break out to the upside. XLV. Healthcare. Looks like risk off. See this pattern? Look at that. And then what I'll do is I'll also then be looking at the weekly time frame. Here it is. So this is just how I can quickly break down things, really fast. Here's Home Depot. It's just stuck in the middle of the range, doing nothing. It's just in the middle of the range. We want to be breaking the top of the bottom, and the momentum will give us a direction, potential direction. Here's RTX, HPQ. Nothing there. So you can quickly see something that's starting to, potentially trigger. It's Micron. See, Micron's just in the middle of the range, nothing to be done there. Nike's starting to pull down. Nothing really ready to go. So nothing really ready to go here quite yet. Here's URA, uranium. And QQQ's just started a squeeze. So those are a few that have popped up. Now, here I'll show you everything actually in a weekly squeeze. So let's put this on a weekly, and these are long-term squeeze potential trades. But anyway, so this is where I get a list to follow. So you can see here, I'll put everything on a weekly squeeze right here. And I can quickly, run through these to see if there's anything that's setting up. So just, takes a little time, do your homework. Here are a few that we look at pretty quick. There's NVIDIA. It's on a weekly squeeze. Look at that. Look at that. Man, it's tight. Look at momentum. That's negative. Potential break right now would be potential is to the downside. Put that down. As much as you don't want to short NVIDIA, that is potentially there. All right, so there are a few. Now, here are a few reversal trade setups that we can look at. Autodesk, etc. So let's take a look at a few of these. Actually, this one looks potentially decent. Autodesk here. So Autodesk is a reversal pattern that I did a scan for. All right, see here. Now this is the other indicator you'll get with the, package 1R2, my momentum crossover, see that orange arrow? So this is, you can see this cycle reversal here. Cycle 1 and 2 are positive. We have cycle reversal. And, we had a volatility squeeze trigger on the 4 hour. So Autodesk, now, the only problem with Autodesk here is that, look, you've got a lot of moving average overhead resistance. So, reversal, but you've got, here's your next resistance. That'll be the 50 simple. And then you've got that cluster up there, but that's a possible trade. Here are a couple others. Actually, CRM is giving us a cycle reversal. Cycle reversal, CRM, see that? Cycle 1 and 2 are positive. Momentum upside cross. It's a start, but that's possible. Another one that's actually popped up is Uber. See that? Cycle 1 and 2. So here's the list. I found them off this list. Here's Uber, right there. Uber, UNH, Walmart. So possibility there. Anyway, this is where you get the potential trades to start looking at. Here's another one, Walmart. So here's a, still negative momentum on cycle 1, 2's going positive. All right. And let's take a look at UNH real quick. Actually, Taiwan Semi is also showing a squeeze and a reversal. Here's Taiwan Semi, but we've got cycle 1 and 2 still negative, so nothing I would do here. So in the course, I'll go through how to use the indicators for the rules, but here's where your initial first step to find the potential trades. So that's a look there, and then a couple others that I'm looking at for next week will be, we'll see where they are on Monday though, will be Google. So you see Google here is starting, is trying to find, a bottom. We've got cycle 1 is positive, 2 is negative, but you can see where my pointer momentum from the 5-minute all the way up is starting to go positive. So, these are things that you start to monitor. And then when you see the momentum starting to shift, that's when you start really getting ready to go. And yes, CVS was also popped up as a potential trade here. Now this one looks really good. That looks good. So see, this one I would put triple stars or highlight that. And the reason is because, see here, because it doesn't have the resistance. Look at that. There's no overhead moving average resistance. You're just starting to break through that 50 simple right there. So this looks really good. So out of all those trades, that one probably looks the best. And then what I like to do is put fib levels in and see where it is on the weekly time frame. All right, so that's just kind of an overview of things that we'll cover and we'll look at in the course. And anyway, yeah, it looks like, yeah, exactly, clean upside potential. Let's put it up over to the weekly time frame here. Also, look at that, wow, weekly squeeze. All right, so this has some pretty decent potential here. Let's get this one other chart. We can get a better feel for it. You can see here, then let's go out to the monthly macro. And you can see here, it's trying to turn, look at that. If it can, that looks pretty good. Okay. So that is a good start there. And then let's take a look at a few other patterns. And then, all right, so here, step 6, breakout reversal trading alert patterns. These are alert trades that were sent out. I just want to show you the chart patterns again. And, again, here are just kind of the summary of the alerts. Again, unaudited, but since starting my first service back in 2018, wow. 586 closed out, 701 winners, 75 break even, 210 loser, win break even rate run around 79% through yesterday. And then for 2025, run around 79% there, win break even, and through yesterday, year to date, around 80%. And it's been hard finding good, clean trades lately because we're in that kind of transition chop. Now, here's one that we did not too long ago. This was on Dollar Tree. This is one that we set up. This was a long entry, and this was set up on the 11th of February. Dollar Tree was trading at 125.50. And then, we took profit. We had a really good profit here. We adjusted this into what we call a long call condor. We had a huge profit on this one. But you can see what the alerts, look like when they're sent out. It says new Dollar Tree long, weekly cycle low, retracement reversal. Here's that cycle low retracement reversal. Here's momentum, cycle 1 and 2 are positive. Target 1, 128, target 2, 130, etc. So here was the trade that was sent out. This was doing starting with a counter diagonal. I won't go through too much of the detail. I just wanted to show you the chart pattern. And then we did a couple adjustments, and here it was on the 20th of February. Here was a profit alert sent out. It was trading out 134.10. And we had this on the 20th, this was up $373 per spread, and we had adjusted it to a zero risk trade. So this was a huge winner. So anyway, here's the setup. So Dollar Tree, we entered the trade on right here, the 11th. So you can see the 4-hour, we had cycle 1 and 2 positive, the daily positive, and then we had that nice break to the upside, started to lose momentum. We took profit, got out, and had a beautiful trade on that. We did a counter diagonal and then adjusted this to a free trade on a long call condor. So that was Dollar Tree. There's a couple others. Here was one that we did not long ago on Apple. So this was one that we set up on the 2nd of February. Apple was trading at 263.40, and then had a really good profit take adjustments on the 3rd and 5th, and then good profit take on the 11th. Here, I'll just kind of flip through it. So here's the chart pattern here. On the 2nd, so we had 1 and 2 positive. We're breaking this 50 simple moving average. So here was, our price trigger to the upside. Here's another one, Chevron on the 8th, trading 157.25, had a really beautiful move to the upside. Now this is an interesting pattern here. So you can see this is a momentum cycle 1 and 2 are up. We had this big spike up here and it pulls back. So typically what happens when you have a spike like that and then you find support, you typically will retest that prior spike, and that's what we got there. So that's why we took the trade here, got out there. Now here's one that this is one that actually we just did the other day. Here's one that this one got out. Let me show you. This was on CF Industries. If I can pull this over. And this is one I found from the scanner as well. All right, so here's one that here's volatility squeeze. All right. So, we had this big spike high here, pulls back, holds at 21, volatility squeeze. We got in, I believe it was right here. So that was on CF Industries. Here was the Dollar Tree. Well, I'll just pull that one up real quick. There's Dollar Tree. There's our entry was on the 11th. See momentum. See the 4-hour. And here's kind of what you're looking at. We had the entry right here. Okay, so here you see Dollar Tree, see that pullback. It's a cycle low, retrace reversal, pulling back up. See momentum, cycle 1 and 2 going positive. This was a scan trade that I found. And then look, starting to break the moving average. So here's your price trigger. See that? Here's momentum, upside cross. And then we took profited here on that pullback and closed out the next day on that pullback. So that was, another trade set up there on Dollar Tree, just, same indicators, same exact kind of steps, step by step. Chevron. Here was one that we had on ON. So the entry was on the 5th right here. Okay, again, same pattern, cycle 1 and 2. This was in a small volatility squeeze, breaking above a prior week high, that dash green. That's also part of the indicator system that you'll get. And then we had that big spike up, went in and took profit. Here's another one, Walmart, beautiful trade set up here. This is just a perfect trade here. Some are better than others, obviously, but here's here's cycle reversal. Look at that sideways pattern. And then we had momentum upside cross, cycle 1 and 2 go positive, breaking here that 50, boom, that was just perfect. Here's Gilead, GILD, massive volatility squeeze, same steps, cycle 1, reversal here, reversal, cycle 1, positive, cycle 2, positive, confirmation, momentum upside cross. Got in right there on that price trigger, that breaking that 50 simple, up she goes. Here's NEE. This was a beautiful trade set up, perfect. These are all alert trades. Cycle reversal, step 1, see that right there. Then we had cycle 1 go positive, 2 go positive. Here's a price trigger. This is a price trigger. We take the entry on a break of a key, either moving average or fib level. Boom, perfect. Look at that. Man, that was sweet. Did some adjustments here, exited right there. So those are a few examples just to kind of show you, what you can expect for, you're going to learn this next weekend. And, if you like to learn more on how to capitalize on the kind of directional market cycles, here's what I've got planned for everybody for next weekend. Hopefully that you'll join us. So this will be mastering market turning points, proven tools and tactics to pinpoint tops and bottoms. So again, we're going to start this next Saturday, the 7th, 11 a.m. Eastern to 2, or however long we need, on Saturday. But everything will be live, then also recorded for you, and then we'll finish up on Monday afternoon, and we'll do a dedicated Q&A on Tuesday, the following day. And so again, here are your links and everything here. Use that Power Cycle Trading /special, okay, and then that small cap DIR 15, and get your different packages here. And let's go through what you're going to get. Any questions? Feel free to ask. So here's course package 1, option 1. With this package 1. In this package, you'll get a choice of one indicator, anything but the main core indicator, so which has 5 study sets. So that's what you'll get. Yeah. Oh, yeah. Yeah. My niece. Yeah, she went to Harvard. That was my beautiful white lab, Blanco. He killed me, man. He passed away a few months back. He had cancer. But yeah, my niece, she went there. So here's what you're going to get. So you have a choice of one indicator, and you can, whenever you want. You don't have to tell us right away. So basically, I think this will make it easier for you. Hold on one second. So you can have any of the indicators I have except for this one here, the dynamic directional trading model. So this is the core trading indicator that, when you see all my charts, that's what you're seeing, all the momentum indicators. So this has 5 different study sets in that one indicator. Okay, so it'll have what I call support resistance package. It'll have the volatility squeeze. It'll have momentum indicators. And I can show you real quick here. 1 second, I'll pull it up and find it. So with this, the core package, the core model, and this is 597 on my website, but with this indicator, with this core model, I'll put it on NVIDIA or something. So you'll get, that's not a good chart. So within the core model, there are 5 different studies, okay? So and one is what I call support resistance package. So you'll get, like, if you look here, see the dashed white and the dash, you can kind of barely see it. I'll get rid of this Fibonacci level here. The dash green, this is on a daily. So that is the prior week's high, that dash green, prior week's close, prior week's low down here. And so that automatically comes up. And then if I had this on a weekly, it'll show you then that will be the prior month's high, close, and low is right down here. Now, if I put this on an intraday, anything below a daily time frame, so maybe a 4-hour, this would be Thursday's high, Thursday's close, and Thursday's low down here. And these are swing. It'll mark the swing highs and lows, and it'll give you your 50 simple moving average right here. The solid, that's color coded for when the slope changes. It'll be red. When the slope is up, it'll be green. And then the volatility squeeze is in there. See the dots there? That's the volatility part of the studies. Okay, so those are in there, right there. And then you'll get cycle 1 and 2 momentum, the reversal indicator. So these are all the study sets within that one core model. So if you do course package 1 option 2, you get everything. If you do the course package 1 with option 1, you can have a choice of any of the indicators other than just the core model. You see that? So you have, if you want the multi-time frame squeeze momentum indicator, that's the one down here that shows you all what's in a squeeze, what's in a momentum, the one I was showing you earlier. And then you'll have time, you can go through the course and then pick this out later. You don't have to choose today. Or you could just, maybe you just want the scanner, right, that I was showing you, or the cycle reversal indicator, or maybe the extreme range band indicator. Here's a breakout indicator, momentum signal trigger. This gives you the momentum indicator, arrows, things like that. Yeah, I have them on for TradingView. Yeah, I don't know. Yeah, I guess I'm not sure how that works for you as far as trading. Just send us you can send us an email at support@powercycletrading.com. There you go. All right, so here's what you've got. So a choice there now, but everybody will get this. This is one of my favorite indicators here. This is my momentum crossover indicator. That's the orange arrow. Everybody will get that, and then you'll get a 30-day trial membership. You can start whenever you want. Then hopefully you'll stay on, and we've got other different packages. Then we'll do the follow-up Q&A, live and recorded, all about futures, trading tutorial on the indicators. So everything here today, $167. And then if you want to have everything, which I would advise you to get, do course package 1, option 2. This gives you all 8 indicators, everything on all the indicator tools that I have. These are everything on my website. So here's the core model. You get that, and then everything here. Okay, and then you'll get my Fibonacci price target mapping course. We'll be using that in the course here on next weekend. You'll get that momentum crossover, trial membership, live Q&A, all about futures, everything there. Today, 337. It's just basically that 167 plus the indicator, 170 there. And there's a 2-pay for you if you would like to do that. And then if you want to check out anything on the website, you'll see everything on my website. If I can find that. Okay. So here again, like I said, all the prices that you're seeing are the prices that I have them for sale on my website. So if you come over here to trading software, right here, here's the volatility scanner. So this is a one that you can have a choice of, if you want this as one of your choices, or if you do all the indicators, that'll come with it. So you get that. And here's the core model. So here's the custom indicators right here, everything. $597. So, here's my multi-squeeze volatility breakout, what I was showing you earlier. So here, everything on my website, you're getting all these indicators for the course. We'll go through all these in the course, how they're used, when to use them, etc. So you can, check them out there if you want. And then if you do want my Elite Open and Close Trade Alert service, you can have that. This is course package 2. And then you've got, either you can pick to use, option 1, which gives you a choice of 1, or you can do option 2 with course package 2, and that'll give you everything. So this is, 5 different types of alerts that I will send out depending on what the market's telling me, as far as the best trade setup. Or a lot of members just do their own thing, right? They just want the trades, but it may be, hey, let's do a butterfly or long condor. Let's do a calendar. Let's do a, calendar pin trade or butterfly breakout reversal credit spread, or maybe do an earnings trade. So those are the 5 different types of alerts that may be sent out. And then if you want that alert service, then you've got the option to either do it with option 1, which gives you your choice of 1 indicator and the extras. So, it'll be 507 if you use the DIR 15, so you get that 15% off. Or if you want all the indicators, then and all the bonuses, it's just 507 plus the additional 170, so 677. There's a 2-pay there, and there's a 3-pay here if you want. All right, so that's pretty much everything on that. And again, I showed you all that. And pretty much kind of review summary there. And then just here's kind of what we're going to go over. That's last time I did it back in November, but that should not be there. But part 1, we're going to go through the 5-step directional trading profits formula, how the dynamic trade indicators work. We'll go through setting up the indicators, the model, review it, how it works. Going to go step by step by step. We'll set it up. And then how to use momentum flows for your price direction, trend strength, how that's done, how we validate strength, how the indicators are used, and momentum, we're using those. and then how the cycle reversal and extreme range band indicators are used with momentum for signaling either price exhaustion and giving us that advance alert and a cycle reversal warning for market top or bottom. How to use the momentum crossover indicator to, use for cycle reversals. This is just a great indicator. How to use that multi-time frame volatility squeeze momentum indicator, and how to identify and use medium long-term trends for all your trade setups. So we'll go through all the indicators, how those are set up, and then we're going to go through step by step the rules that are used. We'll go through how to use the Fibonacci price target mapping. That we use this to map out our price targets, either up or down for profit or for defense trigger areas. What are the best time frames to use for these short swing trades? And then the volatility squeeze breakout pattern, we'll go through that in great detail. We'll go through the step-by-step process for using the volatility squeeze and the opening range breakout. And then there are 5 specific price rules that we'll go through. These are just black and white, so it makes it easier for you to follow along. And so this will be going through the 5-step rules for using the cycle reversal, the trading model, the reversal indicators, and all these tools that, with the momentum indicators as well. So we'll set up all the indicators, and then we'll go through this 5 steps for step 1, 2, 3, 4, 5, trade entry, that kind of thing, like I was showing you a little bit earlier. We'll go through the profit take, exit rules, risk management that I use. So very, very, step-by-step details on how to do this. And then we're going to go through those 5 best chart patterns again, volatility squeeze, how that looks with the indicators, what we're looking for there, the cycle low reversal, cycle high reversal, cycle low retracement, and cycle high retracement. And then we're going to go through scanning, okay, how to uncover your, next big winners using the volatility scanner and the momentum crossover scanner. So we'll go through how those are used and how to build your watch list and how to monitor it. And then, making your breakout watch list and monitoring that, and resources and a big trading library so you can go back and look at it, past trades to kind of give your idea of, what are the, prime things that we're looking at for the steps for, your winning trades, the direction, the timing, etc. So a lot of trading examples in your trading library to use. So anyway, that's going to be everything, the kind of the outline of what's going to be covered there. Hey, thanks, Shams. I will. Thank you so much for that. Here's a little feedback from a few past clients here. And yeah, thank you very much. I'm going to post that. Appreciate that. Thank you very much. So here, one of my members, students, Pam, said I literally lost thousands of dollars on other systems, but settled for Larry's. His technical knowledge is unsurpassed, in my opinion, and his knowledge of using strategies with low risk, high reward are the best. I found since starting trading in 2003. Very nice. Thank you, Pam. And then here's, from Bruce. Larry's expertise in custom tools provide one of the best, if not best, method for identifying, entering, and managing trades. And the follow-up Q&As and trade room reviews using these methods on current identified trades cement the understanding and confidence in using the PCT trading method. That was really nice. Thanks again for that. The biggest improvement to my trading has been the addition of the Power Cycle Trading Momentum 1 and 2 indicators. They really work great, Ronald. And so here's all the software that you're going to get. So here's the core dynamic trading model. So this is only available if you do option 2. All right. So this is going to be it's a 5 study set model that it's a very visual model, and it has like I said, more seamless, faster, and simpler because of the visual things that you see. Here's like you'll have the volatility squeeze, the cycle 1 and 2 momentum, and cycle reversal. That's what you're going to get there. Now we have it for Thinkorswim and TradeStation, TradingView. You can have any or all of these different platforms. Now, that's what you'll get there. So that's indicator 1. That's the main core indicator, again, only for option 2 though. And then here, all the other indicators though you can have as a choice. And then if you do package, course package option 2, you'll get every indicator I'm showing you here. So here's my Power Cycle Trading Momentum Flow Signal Trigger. This is only available for Thinkorswim. This actually just gives you the arrow that pops up when either cycle 1 or 2 momentum go positive or negative. So you can see here, for example, you've got that cycle 1, cycle 2 go positive. So, the arrows pop up, or if they go negative, the arrows pop up there. So that's what, I call this is an add-on. And this is my momentum flow signal trigger indicator. So this is a choice if you want this one. So it's just give you the visual, but it's a really great one to see the arrows pop up on whatever time frame you have it on. So if you have it on the daily, you'll see it. You have it on a weekly or intraday. If you're trading intraday, 5 minute, 2 minute, whatever, those will pop up if you want those arrows, if you have that indicator. And then the multi-time frame squeeze momentum alert. This is a great indicator. I've got this for Thinkorswim TradeStation. This is the one that shows you the top and bottom row, show you everything in a squeeze or everything momentum wise. If it's cycle 1 up, positive or negative, it'll pop up and you have it all on one chart. So you can quickly, without changing charts, see if there's a squeeze or what momentum's doing. So this is the indicator that you'll get. You can have that as a choice or a selection, or if you do all the indicators, that comes with everything. And then here's just such a great indicator, my cycle reversal indicator. This is a choice, or this will come with package option 2. You'll get this. This will actually has an upper and lower steady. So the upper steady shows you the arrow pop up will be magenta. You can color code it whatever you want. So this will basically is my alert to a change in cycle. So this is the indicator you'll get. So when you see the crossover there, that's where you get the actual arrow, like right here, right here. Okay, so there's upper and lower steady for that one. So this is my indicator that I use for the alert to a change in cycle. So you'll get that. You'll get my extreme range band indicator. So this has the extremes. The band 1 and 2 shows you when things are starting to get really stretched. So this is a great indicator. And then adding this with the cycle reversal indicator is a really great tool for spotting really, tops and bottoms to the market. So you'll get that. All right, so identifying price extremes when price is too extended from the mean. So an alert signal for buying or selling exhaustion is the first signal that a security is starting to reverse. Very accurate for signaling in advance potential swing trades or long-term market reversals. So a really great tool, to give you that heads up on something starting to shift. Now this is my opening range band breakout indicator. So this takes the opening range for the first part of the day and then gives you these kind of opening range high low there. And a lot of times that's a great indicator used for breakdowns or breaking up. So this is an indicator we started using back in the 90s on crude oil, just trading crude oil on breakouts. So you'll get that. And then you'll get my volatility scanner. This is my volatility squeeze scanner. You'll get that. And so based on the volatility squeeze component of the trading model, and you can set this up for any time frame you want to monitor from 1 minute all the way up to the monthly time frame. All right, so we'll go through that and how this is used, to find the trades. So that's everything you'll get there. Okay, and then, the course packages, bonus 1. This is Fibonacci price target mapping course. Great course. We'll use this in the course for setting up our profit targets. This is only if you do option 2. And so this is a course that's based on not only just Fibonacci, but kind of 5 things that I look at, to help align and map out price targets, either upside or downside. So it uses a combination of using your Fibonacci levels, moving averages, price action support resistance, standard deviation, forecasting, and then option activity. So this is a really great course, 3-hour plus course. And this is what we use for setting up all of our targets, either upside or downside, for any trades that we're looking to take. So you'll get that. Bonus 2 is my momentum crossover indicator. Fantastic. This is one of my favorite indicators. Everybody's going to get this one. And, you know, it has an up or down arrow to show you when the momentum reverses up or down. So this is a really great tool to use. Question, trading club and trading alerts. If you do the trading club, we'll go through that. The trading alerts, you get my alerts that I send out. Okay, so in the trading club, so for example, here's the trading club. Now, the trading club is open, you know, I have the trading room open Wednesday through Friday from 9:30 when the market opens in the morning Eastern for first hour. Okay, so that's the trading room. You get access to the trading room. Now, sometimes we'll do trade setups, alert trade that we may start in the trading room, but a lot of times the trade alerts, I might send out in the middle of the day or at the end of the day. So the trade alerts are sent out to just specific members of that. We send them out by Telegram. So you'll receive the alert by Telegram. I'll show you that in a minute. And then you also do have access to the trading club, which then you can come in here, ask questions on any trades that you're looking at, any help that you need. And, we're also looking at the trades in the trade room, but sometimes not executing them until maybe later that day. And that's when the alert is maybe sent out with the trade, right? But with the trading club, you get the access to the trading room, the daily market video newsletter I do every day after the close. All trades are archived. We do a weekly Q&A, usually every Tuesday, live and recorded. There's educational vault for all members, and you get 50% discount code off of anything, trading software or indicators or any courses on my website. All right, so that's what you get with the trading room, and that's our trading club. And you'll get a 30-day trial membership. And then if you do the alert service, you'll get this not for 30 days, you'll get it for 4 months. And you can stop and start when you want. And one thing, like Jay points out, he said reading books is fine, but seeing the actual option trade setups makes a huge difference. And that's what you're going to get, when you come into the trading room. So you get a lot of that educational stuff there. Then we'll do the live follow-up Q&A. We'll do this probably dedicated. This will be Tuesday after the course. This will be live and recorded. You'll get, my all about futures, a 31-page tutorial on futures, how those work, a lot of good stuff there. And then you'll get my directional trading model tutorial on my directional trading, power cycle trading model. So you'll get that. So understanding how that works. All right, so that's everything you'll get there. Here's the alert service, and I'll show you how that works. So when we send out alert, it's done by a app called Telegram, which is a free app, and the alerts go out within seconds. And so you'll just link into the app. You'll get that set up, and it's free. And then you'll set that up on your phone or whatever. And I send out alert, an update or an adjustment or a new trade. You'll receive it, and you'll hear it come through. Here's one of my members, Waleed, he actually lives in Kuwait. He said, I have to mention one thing. I'm subscribed to a lot of services who send out trades. Some are good, others are not that great. But one thing I would like people on this webinar to know is when I get a trade from Larry, I do it blindly as time to show me this man is dead accurate in his recommendations. Thank you, Waleed. And Dan said, and this is so true, a lot of members have learned trading options based on just getting alerts. He said, you're very diligent and totally thorough with your analysis. That is the foundation of success of your alerts. I paid for my subscription to the alert service with the first 4 trades I took when I was just learning how to trade options. Please feel free to share. Okay, so that's what you'll get there if you want to join the alert service. And this will be, by Telegram. I'll show you that in a second. So you'll get this for the alerts for the next 4 months. I have 5 different alerts that I send out. And then you'll have access for the trading club as well for 4 months also. Now, if you do the package 1, you're going to get 30-day trial membership to the trading club, but not to the alert service. All right, so if you do package 2 and option 1, you get that choice of 1 indicator, all the extras, and the price today is $507. And there's a 2-pay. If you want all the indicators, all the bonuses, it's just 507 plus that additional 170, and it's 677. And there's a 3-pay. So, you know, I could be sending out a calendar diagonals, could be a condor or butterfly. It could be, you know, a monthly pinning trade, or it could be a credit spread or some specific earnings trade. So that's basically what you're going to get there with the alert service. Now, when I send out alert, a lot of the members, they just want the trade. They just want to do their own thing, but I will always give you a suggested option trade, the trade that I think would be the best for that trade setup. When I send it out using Telegram, I will give you the entry level. I will give you, profit targets based on that profit Fibonacci target mapping. I'll tell you what option series to use, stop loss levels we're looking at, and then I'm constantly updating and monitoring these trades throughout the day. And then if we need to do anything, I'll send you an alert with any adjustments that maybe we need to do or take. And this, again, like I said, is done with the app called right here, Telegram. So you can see it here. All the alerts are sent out with this Telegram app. So they're really fast. Here's one that we did, a new earnings trade alert that was sent out. Here's a profit take update on TLT or Dollar Tree. Here's a Dollar Tree, the trade there. Here's a new NVIDIA. Here was a binary called Butterfly that was sent out. So that's what you're going to be looking at getting with that alert service. Then after the trade is, that day, I'll do a setup video review of the trade after the market's closed, tell you a little bit more why, sending the trade out. You'll get the daily video newsletter every day after the close, access to the trading room and to the live and recorded Q&As every week during the week. And then virtual trading room, coaching room, you'll have access to that every day during the week, or Wednesday through Friday, 9:30 to 10:30 Eastern, and 50% discounts on everything on the website. So all that is, within that package there. And then here's what it looks like when you get Telegram, what that's going to look like for you. The opening range breakout, no, it's based on a certain specific time frame that I use. Hey, thanks so much, Matt. I'm going to pass that on. Here's from one of my really long-time members here, Matt. Appreciate that. Add this to the comments here. Oh no, let me try. I'm trying to get. Hold on one second. Okay. Well, I'll get it here in a minute. Well, so let me move on here. So here are the, here are some alerts that were sent out. Here's the calendar diagonal alert service, kind of a summary unaudited of what we've done there since starting this service here. I am having the hardest time with this copy and paste. I just wanted to get this out there. Got it. I think I got it. There you go. Thanks. I was trying to copy it. I was having a hard time doing it. So here's just an example of what you're going to get here with the alert service. Here, the calendar diagonals that are sent out. Now, we do a lot of these, alerts. So this started this service back in 2019, and through Friday, we've had 402 closed out trades, 285 winners, 29 break even, 88 losers. Win break even rate run at 78%. These are unaudited. So here are some examples. There was one that one we just recently did was Dollar Tree. I didn't have that one up here for you, but here's another one that we did before that was on Apple. Here are just a few that you can see. Here's the Apple trade. We set this up on the 2nd. I just will kind of go through here real fast, but we had a number of different adjustments. So this is what it looks like when it comes out. And then here was the trade setup, and we originally did. We did this trade as a calendar diagonal, but then adjusted it into what we call a long call condor. Okay, and so we ended up with lowering our risk down to just $75 of risk, with the potential to make over $1,000 per spread, which would be over a 1,500% return. All right, so that's the kind of stuff that you're going to get, these potential adjustments. And so here's what it looked like, after the adjustment. This was the Apple trade, and set this up the 5th. It was traded at 275. Did a number of different adjustments, and ended up here. On the 11th of February, it was now trading from 275 up to 279, basically. And we adjusted the trade into just a total debit cost of $75 of risk. Spread blew to $994. It was up $919 per spread. That's over 1,225% return. Okay, so that's kind of stuff that we look for that potentially you're going to get, with the alert service, the kind of trades. Here's one that we did on Chevron that I showed you a little earlier. The alert was sent out, first one on the 8th, and then we did some adjustments, and then profit take on the 23rd. So it went from 157 up to 167. So here's the trade setup, and ended up taking it off, on the 23rd, but we ended up first with just to kind of show you what the progression of the trade looked like. This was doing it with what we call a calendar diagonal, which we set up, going long out here, the 23 jam, 157.5 call, short 16 jam, 165 at 244. So this was up a profit of $226 per spread, 92% return. But then what we did on the trade, we adjusted this trade into, I believe, a free trade. So then adjusted this into a call condor, and covered our costs in what we call a free trade, so zero risk. So by doing this into a condor, so we ended up with the 160, 167 call debit spread, and then short the 172 and have 180 credit spread for a credit of actually $2, and so zero risk. So with the potential profit for $752, profit per contract, zero risk on that trade. And that was a pretty cool trade, and that's where it went out pretty much to the penny. Max profit right there, $173, zero risk on that trade, doing this adjustment to this what we call condor. So that was on Chevron. Here's a example, the butterfly condors that we send out. These are selective trades that we do as well. This is one that we had done on Amazon, a call butterfly. Here's the trade sent out on the 25th, 26th, 28th, and here was the trade setup right here, getting in right there. This was based on the 4 hour. This is what I call an aggressive long. We were using the 4 hour time frame. And so I did this with a call butterfly, where we were looking for an upside target to 235. So we did this with a $5 wide butterfly, 230, 235, 240. Total risk on the trade, $121. Potential profit, $379. So pretty close right there. Ended up with $197 per spread, 162% return there. And then the other thing, hold on a second. So I have some of the indicators. Yeah, the core models available for TradingView. the core power cycle trading model is available for TradingView. Okay, so here's some other trades that we do. These are what we call our lottery ticket butterfly trades. So just a couple examples here. Here's one that we did on GLD, the gold ETF. This was a trade setup. This is a very selective trade that I send out from time to time. And this was one for a pinning trade that we were looking for a potential move towards 399 for GLD. So set this up as what we call a lotto gold binary call butterfly. So the risk is your debit pay. So we're going to either make a huge profit or we're going to lose, in this example, 25 bucks a spread. So that's why it's called binary. And so this was set up on the 3rd of December and on the 19th. It was pretty much pinned right where we were looking for it to go. Here's an example. So set this up here, straight at 387.90, and we set this up on the 3rd, looking for into the expiration on the 19th for a move towards towards the 400 strike. And so did this as a butterfly for what we call a pinning trade. So did a $4 wide, 396, 400, 404 butterfly like that. Total risk on the trade, 25 cents, 25 bucks per butterfly spread. Potential profit, spread width of 400 minus our cost. Potential profit, if we got a pin there, would be 375. That'd be a 1,500% return. And we came pretty close on this one. So these are very selective, but a lot of fun. So here's where that trade ended up going out. Pretty much right there to the pin, right there at 399.74. So went from 25 bucks to 331. So $306 per spread butterfly, 1,200% return on that. So, those are really fun, pretty cool. Here's another one just to show you. This was one that we'd done set up for a downside move on SPY to put butterfly, look at a target to the downside. I'll just flip through this real quick. Set that one up here, and we were targeting to the 560 strike on the put. So did this $5 wide, 39 bucks, and pretty close. This was going out at 560.32. So ended up from $39 debit cost to $456. So $417 per spread, 1,000% return on that. All right. So that's pretty much it. I hope that that covered everything. And if I missed something, let me know. Make sure to take advantage of this great opportunity. If you want some indicators and tools, you can't trade blind. Like I said, you need to have some kind of trading tools and indicators to use. So here's a great opportunity to get everything, at one price of 337 bucks if you want it all. And there is a to pay for that, and then add the alert service if you want to get the alert trades, and go from there. So you'll have your own mentoring with me. 40 years of experience. I've seen it pretty much everything. I don't. Can you copy and paste? You should be able to. When I send out the alert, I send it out based on the copy that I will copy the trade from the. So for example, if I can pull it up, we were looking at. So for example, I was looking at, possibly doing a call Condor Friday on. We were looking at Google, and just show you how I typically send out the trade here. So here's for example. So I was looking at potentially. looking at a contract. We didn't do it, but I was looking at this one ahead of time. So Google here for March. So, what I typically do, I'll set the trade up and then I'll copy trade like this. And this is what I post into the Telegram. So I copy the trade and then I copy that in and post that into Telegram, and that's what I send out. Okay, that's how I do it. So you should be able to. All right. Well, again, thank you everybody so much for being here, and I'm looking forward to seeing a bunch of you next Saturday and next week in the trade room, and we'll go from there. Okay, thank you so much, everybody. Have a great rest of your day and rest of your weekend. I'll see a bunch of you back here next week and next weekend. Ciao.